Good afternoon. I'm Dr. Fasasi Kazim Adiola. Today, we'll be looking at a topic called General Journal. We started this series with a subsidiary book. I will say subsidiary book is a book of original entry where transactions are recorded permanently. We have classification of subsidiary book. We have the sales day book. We have treated it in the previous video. The purchases day book, the return inward, the return outward. We have also looked at all the classification of cash book. In our previous video, we have also looked at petty cash book. The last book in subsidiary book is known as general journal. And the next thing is, what is general journal? General journal is used to record special transaction in which other subsidiary book books cannot record. Yes, there are transactions that other subsidiary book cannot record, but general journal can record. For instance, if we said bought motor van by cash, bought motor van by cash will be recorded in the cash book because it's a cash transaction. But if we said bought motor van on credit, bought motor van on credit, some people will assume that it will be recorded in the purchases day book. That can be correct and that can be wrong. For instance, purchases day book is a subsidiary book that we use to record all goods bought on credit. Once goods are bought on credit, the appropriate subsidiary book is the purchases day book. Now, bought motor van on credit. Motor van is not goods. Motor van is an asset. And once an asset is bought on credit, the appropriate subsidiary book is general journal. But some people may still tell you that you are wrong in this way. If the motor van in this transaction is not an asset, for instance, a car dealer who is selling a van, in that case, if we say bought motor van on credit, the van will not be treated as an asset. Rather, the van will be treated as goods. Where a car dealer deals with buying and selling of cars, bought van on credit will be recorded in purchases day book. But if the van is used for day-to-day business activities, the van will be treated as an asset. And where the van is bought on credit, the appropriate subsidiary book will be general journal. And if the van is bought by cash, the appropriate subsidiary book will be recorded in cash book. In that case, any transaction that cannot be recorded in the sales day book, it can be recorded in the purchases day book, it can be recorded in the return inward book, it can be recorded in the return outward book, it cannot also be recorded in the cash book. Due to nature of that transaction, it will be recorded in the general journal. General journal will accommodate such transaction. Now, the next thing is, what are the uses of general journal? Uses of general journal. One, general journal is used for opening and closing balances. Opening and closing balances. Two, general journal is used for correction of error of errors. 3. General journal is used to record assets bought or sold on credit. And lastly, general journal is used to complete double entry. These are the major uses of general journal. 1. It is used for opening and closing entries. 2. General journal is used for correction of error. 3. General journal is used to record assets bought or sold on credit. And 4. General journal is used to complete double entry. In this case, let's look at an illustration on general journal. Illustration on general journal. Now, the illustration is on the board. The following transaction was extracted from the books of Yumi Venture as at 30th June 2019. June 1st, commenced business with the following balances: land and building, furniture, cash, trade payable. June 5, bought motor van on credit from Shola. June 10, sold delivering van on credit to Sheyi. June 30th, bought stationery on credit 4,000. Now, how do we record this? There's the solution. Yumi Venture will now say general journal. The format is dates, particular, folio, debit, and credit. That's the format of the general journal. We can still put it this way to create space for it. We have a date, particular, folio, debit, and credit. Now, how do we record general journal? General journal is used to complete double entry. And one of the uses is that we use it for opening and closing entries. For instance, commence business with the following balances: land and building, an asset; furniture and fitting, asset; cash, asset; and trade payable. What we will do is that on the 1st of June 2019, the debit item will come first. Land and building, 100,000. Furniture, 80,000. Cash, 20,000. Now, these three are assets. And the rules is that the debit entry must come first before the credit entry in general journal. The debit entry must come first before the credit entry. Now, this is asset account. Now, after this, there's trade payable. They will not be on the same line. The credit entry will shift inward. We have trade payable account, which is 40,000 naira. Now, the purpose of doing it this way is that to determine the amount which was introduced into this business as capital, what we will do now is we now say capital equals to asset minus liability. Want to know how much was introduced to this business at the beginning. That's why this capital will serve as a opening entry. How do we do that? We add the asset together, 100,000 plus 80 plus 20. That will give us a sum of 200,000 minus the liability, which is trade payable. That will give us 40,000 naira. In that case, 200,000 minus 40,000, we are going to be having 160,000. This 160,000 is our capital. This is the money introduced into the business at the beginning of the business. In that case, when we said total asset minus liability, the remainder will be capital account, and our capital account will be 160,000. That's why we said general journal is used to determine our opening entries and our closing what entries. Our opening entries means at the beginning of the accounting period, how much was introduced into the what business. The question told us that what was introduced into the business is asset and liability. The asset that was introduced into the business is 200,000. If out of this asset, a liability of 40,000 is paid back, meaning what the owner introduced into the business is 160,000, and that will be capital. How do we get that? The 200,000 minus 40,000, and that make us to arrive at what the owner used to start up the what business, which we refer to as what capital. And that's how we said 200,000 minus 40,000, and that gave us 160. Meaning at the opening of this business has a capital of what 160, which was not disclosed in the transaction, but general journal has made us to know how much Umi Venture used to start up this what business. Now, another unique thing in general journal is that general journal must have a narration. You must be able to interpret what you posted in English, and you must start the narration with being assets less liability. That's my own narration. You can narrate it in another way. You can say being capital introduced into the business. You're also correct. Now, we're done with June 1st. On June 5th, bought motor van on credit from Shola. You can also post general journal just the way you post double entry. Firstly, in general journal, you must be able to identify the two accounts. What are the two accounts here? Motor van. Who did they buy the motor van from? From Shola. We have identified the two accounts. Secondly, is that what to be debited must come first. The item to be debited must come first. And what is the item to be debited? Any item that Umi Venture is receiving is the item to be on debit side. Any item that is going out of the business or is serving as a giver will be on the credit side. Now, what is this? Bought motor van. Who bought the motor van? Umi Venture. Meaning, Umi Venture is receiving a motor van on the 5th of June. That is 5 June 2019. Now, what they received was motor van. Debit motor van. What to be debited must come first. How much is the motor van? 10,000. I've done that. You must record twice in general journal to complete the double entry. That's why we say double entry is used to complete double entry. General journal is used to complete double entry. The second account, who is giving the van out? Shola. That's Shola account. They must not be on the same line. The credit must shift inward. Shola account, how much? 10,000. You have to give a narration. You can say, being motor van bought on credit. That's all. Being motor van bought on credit. Let's look at the next one. That one is saying that sold delivering van on credit to Sheyi. The two accounts there is delivering van and Sheyi. Who did they sell the goods to? The delivering van to Sheyi on the 10th, 6th, 19. Who received the van? Sheyi received the van. Debit the receiver, which is Sheyi account. How much? 15,000. What did they give out? Delivering van. You now write it as disposal of delivering what? Van. The van is going out. Credit the item going out. They are selling their delivering van out. Who is selling out? Yomi Venture. Credit the delivering van. Who received the delivering van? Sheyi. Debit the receiver. Like this one now. They receive motor van, debit motor van. Who is giving the motor van out on credit? Shola. Credit Shola. Here, debit Sheyi for receiving the delivering van and credit the delivering van account for an item who is going out from Yomi Venture. Bill, disposal of delivering van. That's the narration. Bill, disposal of delivering van. Now, the last item is bought stationery on credit. We're not told who they bought the stationery from, but we are told that bought stationery, meaning they have received stationery on 30th, 6th, 2019. Now, debit the stationery that was received. That stationery account. How much? 4,000. Now, the person that supplied the stationery will be referred as trade payable. The trade payable is representing the supplier. That's trade payable account. Trade payable account 4,000. The double entry is completed. Debit stationery receive and credit the supplier that gives this stationery out, which is represented with trade payable. In accounting, any person that supply goods on what? Credit, or supply item on credit is referred to as trade payable. But any customer that receive goods on credit, like Sheyi, we can refer Sheyi here as trade receivable. Trade receivable is another name for debtor, while trade payable is another name for creditor. We have to end it with a narration. You say, bin, you must start your narration with bin. Bin, stationery, but on credit. That's the end of the solution. Now, students, don't make a mistake. If you look at it, general journal looks like straw balance, which means you may be thinking whether we are going to total the debit side and the credit side. Once you total it, you have failed all. You don't need to total. After you finish the last transaction, keep the posting open. Don't total it. Once you are done with the last item, leave it. We have come to end of general journal. This is the last books in the book of original entry. In subsidiary book, we have 7 books, and all the 7 books has been dealt with in this lecture series. We have the sales day book, the purchase day book, and return inward, return outward. That was in our previous video. After that, we look into cash book. And in our previous video, we have looked at single column cash book, 2 column cash book, and 3 column cash book. All these are for cash book, making the 5th book of original entry. The 6th book of original entry is the petty cash book, which we did in the past video also. While the last subsidiary book is the general journal. What's the importance of this general journal? General journal will lead us to the next topic. And our next topic is correction of errors. And if you look at it, one of the uses of general journal is to correct errors. Meaning, we'll be using this general journal in our correction of errors. Thank you. God bless you.